think we need many more months of a positive inflation data to give me confidence that a rate cut is worthwhile. This forecast from one of the most influential Fed policymakers agitated the stock market yesterday. Today, this forecast received indirect support from Australia, where inflation, on the contrary, accelerated instead of decreasing. In addition, market participants were caught off guard by the sharp improvement in the US consumer sentiment in May. The index jumped to 102 after 97 months ago, defying the forecast of a decline to 94. In this context, the speech of Anil Kashkari, whose words we cited at the beginning, sounded especially hawkish. After all, from his words, it follows that the decrease in interest rates will begin only next year. In any case, now the markets are no longer considering September or November as a potential start of a monetary easing, but the timeline is shifted to December 18th. To sum up, the US dollar has gained the fundamentals to gain bullish momentum. The odds are against that the situation will change dramatically. At least today, the greenback has advanced across the board, with the exception perhaps of the Australian dollar, which also received support from domestic inflation statistics. The CPI in Australia accelerated to a 5-month high and also pushed back a possible rate cut by the Reserve Bank of Australia. In the United States, a key report on the PCE price index will be released on Friday. Analysts project a downtick from a 2.7% in April to 2.6% in May on a year. But it's already clear that the American regulator needs several months of monitoring prices to venture into determined auctions. In the first half of the day, the US dollar index, which measures its position against 6 rival currencies, was trading higher in the range of 104.50 to 104.80. The S&P 500 index closed flat yesterday. Wall Street gave a mixed reaction to the comments of financial policymakers. After all, the boom in artificial intelligence continues to excite the imagination of stock investors. And today, the S&P 500 is opening the New York session higher and is likely to trade sideways in the intraday corridor of 5,281 to 5,316 points. Interestingly, the euro-dollar pair was in a similar equilibrium on early Wednesday. However, after the release of reports on consumer inflation in Germany, the euro plunged sharply. After all, no one doubts the fact that the ECB will soon begin easing its monetary policy, so the decline in consumer inflation in most federal states of Germany only became an additional argument in favor of this policy decision by the ECB. The single European currency interrupted the recovery. Meanwhile, the euro-dollar pair had almost reached the resistance level of 1.09. Under sudden pressure in the European session, the instrument began to slide within the intraday corridor of 1.0833 to 1.0864. In the range-bound market, the reasonable strategy is trading following the direction of outgoing impulse relative to one or the other border of the trading range. Currently, the euro-dollar pair is trading sideways between 1.08 and 1.09. The direction of the impulse can be determined mathematically. If, when subtracting the previous price from the current one, we obtain a positive result, then the momentum is also positive, hence the price rises. On the contrary, a negative result is a signal of a drop in the price. According to technical analysis, this data can indicate a further trajectory of the instrument. By the way, to sum up the results of May, the euro is expected to strengthen by 1.7%. Besides, this will be the first month of growth of the European currency in 2024. Oil prices showed one of the most interesting market moves in recent times, and yesterday Brent oil futures rallied by more than 2.5%. The Brent price rose above $84 per barrel, and this has already happened twice over the past months. Just like the previous two times, the price predictably turned around and went down towards the support of $82. So far, our experts do not see any compelling reasons for oil to leave its trading range of $82 to $84, though analysts foresee local breakouts of these borders. Perhaps the hawkish agenda by the US Central Bank will push oil prices down. Moreover, if tight monetary policy in the United States is maintained for a longer time, the $82 mark will act as the upper border, that is resistance. On the other hand, yesterday's rise in Brent above $84 slightly corrected by cycle of the established range of 82 to 84. At this stage, of course, it would be premature to say that the oil market is in a global bullish cycle. But if the Brent price is able to maintain this high at the end of the week, the buyers may receive additional support. You have watched the market review by InstaForex analyst for Wednesday, May 29. Subscribe to InstaForex TV channel and we keep you updated on all market developments. Feel free to ask any questions and leave your comments. See you online tomorrow.